challenges for this cattle industry for right now. We were talking about that, and the consumer budget might it's gonna be declining for this economic development. Talking about that with Dr. Martinez from the University of Tennessee. He is a beef specialist in Knoxville at the University of Tennessee. The Feeds report is up to 1.6% from June report, and the economy is looking declining for credit card debt. Well, the demand for beef is up. I am talking about it with Dr. Charles Martinez from the University of Tennessee Extension for the Livestock Sector. Dr. Martinez, how are you?
Doing good. When we're sitting here recording, it's the day after the USDA closing ports again for Mexico here on July 10th, and then we got some rain here in Tennessee for the first time in a while. So it's been a busy morning and it's been a busy week over here on the east side of Tennessee.
Yeah, of course. Well, Dr. Martinez, let's discuss about the cattle on feeds report. It is up to 1.6%. What was your thoughts on it?
Yeah, so the cattle on free feed report, um, it's always a report that people find interesting in terms of just kind of understanding what's out there in terms of supply and what we can expect for beef production at the end of the day for the supply chain. And so one of the things that we kind of start looking forward to, especially in the summer, is the fact that we're in the middle of grilling season. And so with grilling season coming on, we usually expect to see more marketings occurring, and marketings are the cattle that are leaving the yard and going on to packers, whereas placements are cattle that are coming into the feed yards to be fed out. And so one of the things that was really interesting in the cattle on feed report this past month was that marketings were up 10.1%, or marketings were 10.1% lower than May 2025. And so some of that is going to be attributed to one less workday compared to last year. But I think that's the first indication of tighter supplies, or that is an indication of tighter supplies throughout the supply chain. But then when we start talking about placements, fewer cattle were placed into the feed yards in May, with placement 7.8% below last year. But placements in Texas and Oklahoma were down 16.8 and 21.6% compared to last year. So if we think about Texas and Oklahoma, New Mexico, and that whole region as a fed cattle market region, those are extremely large numbers to see jump out, those are extremely large numbers and jump out to me. I think part of that is a function of not only tight cattle supplies or feeder cattle supplies in that area, but also a function of the fact that we don't have any of those Mexican cattle. We have fewer Mexican cattle coming into those yards and being fed out. And so fewer placements and marketing left the total number of cattle on feed down 1.2% compared to last year. And I think if you were to look at pre-report estimates, a lot of people were, estimating around 1 to 2% lower. I think as we start marching our way through the rest of this year, I really think that's going to be something to keep our eye on, especially as we mentioned at the top of this, we closed the Mexican border. So I think tight feeder calf supplies are going to continue, and they're only going to get tighter. And as we work our way through our national calf crop from the past couple of seasons or calving seasons, I think we're really going to start to see the ramp up of tightening supplies, and I think that it constitutes elevated feeder calf prices for our cow calf producers, which is a good thing. But also, if we think about it from a stalker backgrounder or feed yard way of thinking, those assets become really expensive. They're already the most expensive prices that we've ever seen, and I think they're only going to get higher as we work our way through the rest of the summer and into the third and fourth quarter of this year.
Do you recommend for the premium risk on a herd, Charlie?
Can you repeat that question, please?
do you recommend for the premium risk on a herd Charlie?
Yeah, I do. If you're talking with regards to risk management, is that what you're referring to?
People have some credit card debt. However, the beef demand is high. Do you have any concerns about the economy and inflation rate? Unemployment rate is getting it up.
You know, kind of what we've talked about already. I think concerns, no. It's more of something to watch. If we think about a stoplight, traffic stoplight, we have green for go, red for stop, and a yellow for concern or caution. I would put us currently in the yellow bucket in terms of there's not necessarily a strong concern, which I would consider a red light, but it's more of a something to watch, depending upon what industry you're talking about, what segment of an economy you're talking about. If we talk about different facets like housing, they're in a totally different situation than the ag sector, and they have different situations occurring. And so if we sprinkle in, like we talked about, unemployment, credit card debt, the price of beef, and we focus on beef in particular, I think right now the all market signals are showing yes, prices are up, but demand is up, which is a good thing. And so that also indicates that we still have some ceiling to go in terms of demand. But the question is, how do they buy that product? Is it going to be with credit to continue to drive up credit debt, or is it going to be other forms in terms of their actual income? So no real concerns right now, but definitely something to watch.
Of course, we will see, but it's pretty weird situation for right now.
Oh yeah, 100%.
What is your final thoughts about the feeder cattle for right now?
So, final thoughts are if you're selling or marketing feeder calves, it is an extremely fun time. Uh, I would hope that a lot of people are securing the highest profits that they've ever seen. We do know that inputs have increased relative to the last time we saw prices be quote unquote high. We also know that the price of money is more expensive than the last time we were in that situation as well. But I think profitability and the margin that is there should be at all-time highs for everyone. Luckily, we've gotten some rain in a lot of the parts of the country. Unfortunately, too much rain in certain parts, especially in Texas with the most recent floods, and then also in New Mexico, Ruidoso, New Mexico with floods. But it seems that there are going to be ample supply of hay. There's going to be low supply of feeder calves moving forward. Hopefully, the cost of inputs can either stabilize or take a downturn and not increase. And if that happens, we're looking at more increased profit margins and long extended profit margins for the cow calf sector. If you're someone buying feeder calves, it's not so fun, right? It's very expensive. It makes these cattle be ultimately high risk because they're so expensive, and with money being so costly from a feeder calf standpoint, or if you're buying them, they're so expensive. They have such high levels of risk that are associated with them right now. Making sure everything stays alive is going to be critical, and ultimately getting those cattle to the packer and across the kill floor at those prices, if you can secure them, is going to be hopefully locking in some type of margin. The question becomes how much of a margin because of the increased cost for that segment of the industry. It's going to be something to really watch, and as we all know, the Packers right now, the Packer sector altogether, margins have been really negative for quite a bit of time. So the question is going to become, at what point do we see any movement on the Packer side that works its way back through the supply chain to the cow-calf producer? So right now, if you're a cow-calf producer, it's a great time. Everyone else up the supply chain probably has a lot of risk and some negative margins occurring.
Thanks, Dr. Martinez.
Yes, sir. Good to be with you again.
I'm with Dr. Martinez from the University of Tennessee in Knoxville on back roads of Illinois.